Well, good morning. Yes, I'm Pete Najarian. This is the Take for Market Rebellion. And surprise, surprise, it looks like I'm going to be joining the folks on the halftime show as well today on CNBC at noon. So that should be a lot of fun. Before we get to that, how about we look back at yesterday real quick and just run through just some of the craziness that was going on yesterday. So the market was under pressure early on, especially the Dow, down about 170 points. It kind of rallied back. It sifted right back down again towards noon, and then suddenly started to explode to the upside. It turned and burned and added about 200 points off of those lower ends. And what do you know? We finish up almost 100 points to the upside. NASDAQ bounced around pretty good as well, but the NASDAQ didn't have as much success to the upside. Actually finished down for the day about 80 points or so, so call it about 0.6%. And what was really kind of pushing that NASDAQ down and the weight on it yesterday, really, you look at biotech, certainly that was down almost 3%. You look at the semiconductors down 1.5%. You look at technology, down about 0.5%. And it was a lot of those big, the names that we look at and we talk about these high PEs. Well, they were under pressure. DocuSign, Tesla, Zoom, Teladoc, all of the names that you know of, those were the names that seem to have been under some serious pressure when you're talking about some of the various technology names. The semiconductors, it was NXPI, Applied Materials, Lam Research, they all had some pressure. Moderna down about 7.5%, certainly influencing. I'll tell you what, take a look at the biotech index, the XBI, and that'll give you a pretty interesting look, because if you've been listening and in on these little shots that we do here with the take, I will tell you, you take a look and it is down significantly, the biotech, and that has that piece of the NASDAQ. And so from highs over 170 to where they are right now, this has been a pretty significant pullback just since the early parts of February when we hit those highs. So just keep an eye on that and be aware and understand that that's part of the NASDAQ as well. So VIX yesterday, trading between 20 and 21.5, relatively tight range, closed right there in that in-between area, right near that 21. Volume was a little bit light. You know, the interesting part about it yesterday was it seemed like the volume that we had was very, very telling, and it really turned out to be some great volumes that we had seen in terms of unusual, but as far as the numbers, well below what we'd seen last Friday when we were trading over 40 plus million contracts. So 32.5 million contracts. It's interesting to say this, but a little bit disappointing. So energy was another one of those areas, especially those beta stocks and the financials. The storyline about the hedge fund and all that stuff that was going on, it affected not just the specific names, but it had an effect across the financials. But it looks like we're seeing a little bit of a recovery off of that today. And what are we seeing today? Well, we're seeing the 10-year trading up again, and it looks like it's setting new 12-month, 14-month record highs for where it is right now on this rebound that we've been seeing out of that. You look over at the Dow and the pre-market, down a little bit, nothing to worry about. When we talk about the Dow and we talk about those numbers, and we're talking about 33,000 in that area, 40 points is not that significant. But that's where we were looking in the pre-market. It looks like that's where we opened. Had a little bit more pressure. We got to triple digits. We were down about 100 plus points. Let me take a real quick look right now. And what do you know? In a matter of just maybe 3 or 4 minutes now, we're only down about 14 points on the Dow. Look over at the NASDAQ. That's down about 80 points. That's down most of this morning. It was down about 100 points, and it's been shifting back and forth. But the pressure still continues to be honest. Technology is down about 1%. Energy down about 0.75%. Semiconductors, once again, down about 1%. And you look over at biotech, again, there's some pressure there, down nearly 2%, not quite 2%, but nearly 2%. Like I say, it's about $50 off of the highs for the XBI. So that's quite a statement. You look over at crude, we were talking about last week for sure. And we were talking about it again yesterday, and I'm looking at it today. It was underneath 61 last I looked, down almost 3%. So we're seeing financials rally, though, and rebound off of yesterday. And so that's something that certainly sticks out. I'm looking at volatility that early on up about 2%, trading right around 21.25. So a really interesting sort of movement that we're seeing, and the disconnect that we've seen at times, and at other times we've seen everything kind of moving in concert together. But that disconnect today, for sure, with the NASDAQ itself under some serious pressure, and yet we're watching the Dow as it's starting to rally and get back close towards flat. Now, a couple of unusuals. I got 2 of them for you, and then I might be giving you an extra one on the halftime show today, so it looks like 3 on the halftime show. They'll be different, of course, because we don't want to have the same names. But I'm going to start off with this one. Letter X, U.S. Steel. Now, this one's interesting because we've seen in March so far, we've seen 4 direct, absolute bullish hits that have been coming in here, looking out to the April 1st expiring, which is this week, and a little bit further out to the regular expiring April options. Today, it's April 1st options that are expiring. So that's just a couple of days. That's this week. So keep an eye on this. But 8,500 of the April 1st 26 strike calls were purchased, and those were going for anywhere between 40 and 80 cents. Stock was trading 24.80, so it's a little bit above where the stock is right now. We've had a nice jump. Take a look at the charts on letter X and you'll see what I'm talking about. It's had a nice, pretty violent move to the upside. Looks like somebody out there is expecting even more of a move to the upside coming from U.S. Steel. The second one I've got for you today, I hate doing these ETFs, but about a week or two ago, we talked about the QQQ ETF to the puts and all that put buying that we'd seen. Well, that's actually paid off pretty nicely because of the fact that we've been watching this NASDAQ as it's been certainly under some pretty serious pressure of late. So is there going to be a turnaround? Well, somebody seems to think that there might be at least a somewhat of a turnaround. So the April 9th expiring QQQs, as a matter of fact, QQQ was trading right around 312.80 at the time. A buyer of 7,000 of these April 9th 325 strike calls. So looking for a little bit of upside from the QQQs. Maybe we start to see a little bit of that turn. Those were going for about $1.15. Now remember, this is an ETF, of course. So one of the reasons that I usually steer clear of these is because you don't get the bang for your buck. And I'd rather go and attack directly on specific names. And in the past, you've heard me talk about, well, if I'm looking at, for instance, the XLE, the energy index, I oftentimes will go to either Chevron or Exxon, and I'll try to find surrogates to use. In this case, that's a little bit more difficult, I think, with the QQQ, but you understand what I'm saying. So you don't always oftentimes get those kind of moves that we really like to see in the individual names, but maybe this is an indication that's giving us the broader sense that the NASDAQ has a little room to the upside. We'll see how this one plays out as well. Folks, I'll see you on the halftime report later on. Get that education. I'll tell you what, you want to understand the derivatives markets. Market Rebellion team is a great team that can get you started and get you on your way to understanding derivatives markets that much better. Look forward to seeing you around noon today. Have a great day at trading.